Yeah, first I want to preface this video with something that may be a little bit of interest. You probably think maybe I just got this off the internet. No, I didn't, but it's heavily redacted except for the money part. And what I'm bringing up here is a principle whereby, you think the elite got cash all the time? No, they got assets. Yeah, they got real estate, but they do have metals. They don't necessarily have silver. They have isotopes. Actually, this was owned by some Russian guys. It was kept in Germany. Can't even freaking read that damn thing exactly. I'm not going to read it exactly. This is what you call an SKR, safekeeping receipt. Cost 1,305,000,000 U.S. dollars. And what they'll do a lot of times is they'll float this stuff around and do various investments. Even, well, there's a lot of different things they do on these private placement platforms that aren't open to the public. And they actually deal in financial institutions that aren't open to the public. But here's what my point is. You're the little people, whatever. Some people don't like being called the little people, whatever. You got some, coins or whatever the heck you got. You're following the right principles. As a matter of fact, what a lot of times what happens is, I've been, I kind of peruse what other people say, and I think people listen to me and they pick up about the 1 basis point. Actually, 1 basis point, 1% of 1%. But it's even more skewed than that. I'll tell you that right now. As a matter of fact, a lot of times people don't even notice. I talked about, what goes on in Cyprus, how it's a tax haven for the Russian oligarchs. I said this before, but I just want to preface some of this before, I get into some other things here. But, a lot of times what they'll do is a like-kind exchange on real estate. Like somebody will own some Greek islands, and they don't want to have a capital gain. So they'll do like-kind exchange. They have, these aren't regular financial people that specialize in that. These are special financial people. And I've seen a lot of this type of stuff, actually. That's why, I'm not going to dramatize it. I'm not going to say, just saying it's real. But, that's how they work, man. They don't like advertising anything. As a matter of fact, why do the elite have yachts? Why do they have yachts? Because they don't like public scrutiny. It's not because they like yachts. It's because they can be out there in the middle of the water doing whatever they want. Nobody's freaking got paparazzi ain't around here. Nobody's bugging them, you know what I mean? The only people go on that yacht are the people that are invited. It's an expensive proposition. But when this was actually only a couple Russian guys that had this. But they don't share. They don't share. I'll you that right now. But I just want to point out, we're going to get on with the update here at Silver and actually do the motorcycle theme again. I like doing the motorcycle theme, but it always, the motorcycle is something actually, the woman grows up, she's been around, her dad had a motorcycle, and now she wants to ride. So, it's whatever you hang around, that's what you become influenced by. And it could also be whatever school you went to. If you went to Catholic school up in New Jersey, you probably met a lot of interesting people, and you probably know a lot of interesting people. But anyway, just want to get on with this update because, I know the media is always painting the economy through these rose-colored glasses. And I put out it before. I don't want to put the charts out there. I think I put some of the charts out. I don't know. So I'm not going to use charts. I'm just going to use these, freaking snapshots, whatever the hell it is. But, it's been, in the last few months, there's been more credit rejections than any time ever in U.S. financial history. It totally blew away the number of credit rejections that even happened in 2008 and 2009, which is telling you, not only do people not have money, but they can't get credit, so the economy is really like drying up. And I also talked about the retail sales not being good for the last several Christmases, and actually now there's lower durable goods orders and all this kind of stuff. But the markets are still going up. You're thinking, hey, whatever, right? Well, there's more to it than that. There's more to it than that. Now, does this, I don't know how this is going to relate exactly to the metals themselves immediately, but, it's telling me, a lot of things everybody's been discussing for a long time, taking longer than you expected, but the principles are definitely there. You know what I mean? But don't worry about it. I mean, enjoy life. This isn't something where, I'm going to scare the crap out of you and you got to be on the edge of the seat like it's a soap opera drama every day. But I want to give you some more facts about different things because, actually the more things change, the more they stay the same, right? It's exactly the way it is. Just like whatever was cool back then is still cool today, right? That's just the way things are. And also the same kind of ups and downs. Now, what's going on though, and a lot of people, this has actually been like on major media. I know people say major media, but I'm not looking at the major media opinion. I'm looking at what the raw data is and the raw facts. Actually, this is the first time in many, many years, over the last few months, was it more than a few months, there's been major outflows of cash out of the markets, yet the markets are still going up. Now that is really telling me something because it's one thing to talk about the PE ratios being skewed and and also we know about the Federal Reserve policy is actually what's created a stock market bubble. There's a lot of actually major players and big people talking about this. It's not like the doom and gloomers on the alternative media. It's actually a fact. But nobody really knows exactly when it's going to come down because it looks like Soros, I talked about George Soros. He made a huge bearish bet on the S&P back in August 2013 that expired in, 2013. That expired in 2014, late 2014. Then he made another huge bearish bet, even huge bigger, in 2014 August, and that'll expire sometime in later 2015. I think he's going to be right on it though. He lost out. He lost out on a good part of it, but I don't think he's going to. Well, actually, he gave I think $200 million to Bill Gross to play with or some crap. Like play with. Yeah, play with. Yeah, play with it, but don't lose my money. You better make some, you frickin' play with, freaking yo-yo. That's what they call it anyway. Freaking, they all talk real nice until they lose money. But the thing is, he's got it where, when I'm looking at when there's major outflows like this, it's like an axiom now. Now I'm seeing this is not something that's going to happen a couple of years from now. When there's been major outflows and going out of the markets, it's like you're looking at, I'm not going to display the chart because I don't know what the hell the chart is, who did the chart, or whatever the hell it is. But it wasn't something on the alternative media, it wasn't on the blogs, it was on the regular financial media. In other words, if they paint a lot of nice rosy pictures on stuff, and then on the top of it, they really tell you the real game. They really tell, they might editorialize that everything's great, but hey, they tell you the real game. They tell you the real game if you really dig for the raw facts. So you got to look. But no matter what happens in the economy, there's always going to be some kind of sales. The thing is, the economy, like in other words, if the stock market goes down, most people aren't invested in the stock market anyway. And I don't know if that's going to mean that the the metals area is going to go down, or commodities. If pumpkins was commodities, maybe you'd be selling those, to be invested in those too. But the thing is, I can also tell you something else too, and this is a little bit of a tidbit. Goldman Sachs has been talking about, they expect oil to go down to $20 a barrel. Now, I'm not giving you financial advice to go bet this way, but you know what? They are betting the exact opposite of what they're talking about. They're actually the biggest investor in what the hell is that? The double leveraged oil. I think it's called oil or something. I forgot what the hell it's called, man. I forgot. UCO. Is that what it is? UCO? Doing this off of memory, man, and I'm kind of tired. So UCO, right? I think it's what it is. That's what they're invested in. They're the biggest one in it. and also a lot of the biggest major banks is involved in it too. I think Barclays or something. And I'm thinking, the money doesn't go away. And what I'm thinking is when the markets go down, what you're going to see is the wealthier middle class gets slaughtered, and the top guys, the money's already they're already pulling out. There's people pulling out like crazy. There's a lot of net outflows, and from what I'm thinking is they're probably going into oil, because oil looks too damn low right now. Remember what I said about Harold Hamm, Hamm, the guy that he's the biggest, he's the 50th most wealthy person in the world, and he points to, like this girl is pointing at me here, and you and everybody else. He points to the fact that, he said that, I know he sold out too early, but he cashed in all his short position on oil. Now some people say that was because he's got a divorce, but I don't know if that's the reason. Because he didn't think it's going to stay down that low. And actually now it's looking like he's right. Because I think oil is like, 57 a barrel on the WTI. It wasn't that long ago. They were predicting $20 oil, $10 oil, right? I mean, when it goes down, they start making ridiculous predictions. Then when it goes up, they make ridiculous predictions. But I know when it goes up and they make ridiculous predictions, what happens is that's a scam. See, I don't work for a bullion dealer, and I'm not one of the pumpers. I'm just telling you my raw opinion on this stuff. I don't really know what the hell's going to happen exactly. If I knew what's going to happen, well, if you knew everything about even one commodity, the weekly moves, you could start with $100 in a year and be a billionaire, literally. There's no BS about that statement. But that's the thing. Nobody really knows for sure. But I have a good idea overall. But I also know that Hillary Clinton wishes she was back on the back of this motorcycle or in front of this motorcycle rather than being running for White House. And karma's a bitch when it comes full circle to the people on the top when they get just caught up in the system that feeds them and they got no way out. Actually, I tell you the truth, a lot of people in offices kind of long to be free. Ha ha ha! Too bad, man. That's why you freaking can't stay in it. I can't stay in there too long. There's yo-yos, but they don't like it. They don't like it. That's too bad. So, but the point is, if there's net outflows the way there is right now and everybody's pulling out the money, the only thing that's holding up the market is probably Federal Reserve policy. And I stated this before, that the markets have far outstripped the GDP plus the inflation rate. And over the entire financial history of USA, markets have been within 2 or 3 percentage points of the GDP plus the inflation rate. So now they're like, I think double that. They're like double, like they're 200% or something. I think that's what it is. Like we haven't had any inflation hardly, at least by consumer the consumer price index, and we haven't had that much in GDP growth rate. It's been very slow. Yet since the 2009, early 2009. The markets have like doubled. So I mean, it's almost like it's way the hell skewed, and that is really where the Federal Reserve money's been going into. They're trying to kickstart the economy, like old girl here is on the Triumph, trying to kickstart the bike, and she's probably not. I don't know what she's doing here, but it's almost like say the Federal Reserve didn't have the ignition on. And they're kickstarting, and they're pumping gas. And then when they turn the ignition on, it's going to go boom, man. Big backfire out the exhaust. I don't know. But that's basically what's going to happen with the markets, man. They're pretty much going to implode. But, it's almost like, what are you going to do about it? I don't think it has anything to do with us that much. Because if you're more heavily invested in metals, or if you're invested in electronic metals, you're invested in commodities or oil or anything like that, or oil's commodities, I think going to do okay. It's been a patient ass waiting game, and that's one of the things I advocated, that people just stay with the physical, because actually a lot of these ETFs they've been coming under a lot of scrutiny lately, actually for a number of years. Nobody knows what the hell's in them. You know, I got ETFs, and you know what? I'm going to take the greenbacks if they freaking go. You know, once they make out, that's gonna be the first thing to freaking out the door, because I don't trust it. I don't trust it. I know these guys, these brokers, man. They'd be like, I don't know what happened. I don't know what happened. You know, I don't know. I was just working here. The system had a catastrophic failure. Ugh. Yeah, right. We're a boutique freaking investment house. Oh yeah, yeah, boutique my ass, man. You know, they're just I don't know what the hell they are. So anyway. I don't know. The only thing real is a shovel head, you know, and a blonde. So, but you know, it's almost like we're going through the cold winter, I guess, of the financial seasons coming upon us. And you know, if you're prepared, you're prepared. You know, just take the ride and enjoy it. Because, but like I said, been saying, you know, this crap's been taking so damn long. I don't want to talk about it too much. And I do updates on this stuff, but you know, the one I really came up that I saw was another glaring fact. Like I put one out, I don't know, a week or two ago about the consumer credit rejections never have been as high as they've ever been ever. That was a big one. That tells me money's drying up. But the one that's actually telling me that the markets are going to implode is the net cash outflows. Money's flying out of the markets as they've still been going up over the last several months. Money is flying out of the markets. And I'm not getting that from, you know, the alternative media, because I picked up too many times those guys are liars. So I know some people criticizing me for looking at the major media, but I'm telling you, the major media, they might put out a bad opinion on stuff and they might lie to you in a lot of different ways. But they still present the raw facts. You know, and actually, I look at a raw fact like Goldman Sachs betting on double leverage oil is telling me oil's been going up. Oil's been going up, man. I don't know. But you know, I'm going to tell you something too about some of this stuff with, you know, these isotopes, man. You know, if you think stuff is crazy, skewed prices, with silver, it ain't nothing compared to what happens with isotopes. They can literally change by 1,000 times in price. Literally. And you know how much money you can make on that kind of stuff if you're betting leverage, or you can lose? I tell you, man, the world's full of a lot of sharks. And there's a lot of stuff that goes on behind the scenes. But, you know, that's another story. But let me just tell you this. The basic principle is still the same. The people that got big bucks, like in other words, you know, I looked up a lot of these people that had these safekeeping receipts, who they were. They don't show up on Forbes. I've seen certificates of deposit on people coming up with a billion, you know, the thing with 9 zeros on it, euros, and guess what? They didn't show up on a Forbes list. I could tell you what a family I worked for up in New Jersey before I was in the Marine Corps, they were like, yeah, they were Fortune 500, but unofficially they were number 4 in the country. So, how did they do it? Assets. I mean, a farmer can do this too. Yeah, well, you know, it's almost like this. You could have this bike here, right? You could have this Harley. You say, what the hell's it valued at? You know, what year is it? You know, I don't know. What is that thing? An 85 Evo? I don't know what the hell that is, man. What is that, a freaking Softail or some shit? But, yeah. The thing is, you could say it's valued at, I don't know, $4,000 or some shit, and maybe it's worth $15,000. You could do that with land, because you hold it at fair market value, right? That's why they do the like-kind exchange. You know, they do that with real estate all the time, like-kind exchange. But they also got people that specialize in major real estate, like Greek islands and stuff. So, you know, but that's, it's kind of like a moot point, and I'm not like bringing it up to, you know, impress anybody on that shit, because I know, like, I don't like, and tell you the truth, I agree with a lot of the alternative media on a basic principle, but a lot of those guys are, um, they're fear mongers, and I think they're fear mongers to make you do rash things. I mean, this is not the new. I mean, the way this crap's been going on today, it's not the new. You want to have a cool head, but you're sticking with the right principles when you stick with real physical product. You know, I mean, someday maybe pumpkins might be worth more than U.S. greenbacks, right? I mean, at least you can make pie out of them, right? Or this cool ass trike, right? So it's a matter of don't be afraid to dump the stuff actually when it's going to buy you some serious hard physical assets, and that's really what you got to look at. And like I'm looking at right now, if the major investment houses and banks and stuff are going into, well, I know besides they're going into water too, besides oil, the assholes, they freaking, they got freaking own the water. But if they're going into that, it's also telling me that's related to other commodities. They might be going into commodities too. I don't know what they're doing, but I know about the oil, the double leverage oil. And I don't want to tell you to do that. I'm not telling you to do that. I'm just telling you Goldman Sachs is saying one thing and they're investing the exact opposite way. They're actually the number one holder in the ETF for double leveraged oil, along with a whole other bunch of freaking investment banks. That telling me oil's going up. So ride a motorcycle, man. Ride a bicycle. How's that? Ride a bicycle. Save yourself some money, man. Go 2 for 1 on the damn thing, right? So anyway, just remember, net outflows. Major net outflows while the markets were still going up. That's been going on for some months. I didn't know about the net outflows of cash though, and I got that off a very responsible source. But I'm not going to reveal it. I'm not going to reveal it. But it's like, not that it's a big secret, but you can probably find it real easy. Just look for net outflows of cash, from the stock market in recent months, and you'll find it. So that's what's going on. So anyway, which means to me, back to super QE, and guess what that means? Inflation, which means pressure on the dollar. And since the dollar's already at a real multi-year high, and not to say that it's going to go to zero, but it should be doing the other side of the pendulum, and it should be going down. I mean, these other people, I know the alternative media is going to be cheering on Russia. I don't like Russia. I mean, I don't like Russia, but I don't like those yo-yos on the top that run Russia, like Putin, So, I mean, we got Putin the cat. Putin the cat can run Russia. We'll get rid of that human guy. But anyway, stay free and ride free, and grab all the pumpkins you can, and just be happy and stuff like that. And, if you're a chick, you can be like, don't be like Hillary. Get on a bike and enjoy yourself. There you go.